Boom, we're alive, ladies and gentlemen. It's good to be here with you today. It's always nice to see assets do well in a bull market. Ethereum breaking new all-time highs. You know, I love this conversation, and I always kind of find it funny that that there's a maximalism or a tribalism in any way, shape, or form in the investing world. Often we see collaboration between companies more so than like direct competition. Like obviously Amazon has competition, right? Bitcoin, we could say, has competition, but more and more so, a lot of these companies end up working kind of together, right? So you can now own a store on Amazon and do extraordinarily well by selling stuff to a much larger demographic than you could have ever reached had you just had like a box store itself. So distribution is important, and as Ethereum and blockchain grow bigger and bigger, they're actually helping one another. We've kind of gone over this quite a bit. I think it's becoming more and more apparent to people that there might not just be one in this game of contracts and information communication. So we see Ethereum this time for the first kind of moment here. And what I like about this is, first off, both Ethereum and Bitcoin were in a very similar part of their trading range. The fact that, so again, let's go back in time and take a look at what, we always make mistakes, right? And in this primary shakeout, I was a little worried about Ethereum. Like even here, like this was such a deep movement back into the top of the buying climax, the previous range. And when we were comparing it versus Bitcoin was actually stayed above that. So it showed a lot of strength on its recovery right away. What's nice here is, again, some of these primary shakeouts, because we're in such a volatile area where Ethereum is still technically venture capital, every day that Ethereum continues to move forward, it gives credence that it's going to continue to be here for a bunch of days more. And that's important to remember in our thesis, because we're looking at a game and a function through time. Think about Doge. Doge back in 2013 probably didn't seem like a great investment idea, but if had you put $1,000 there today, it would definitely appear to be a good investment idea, because it's all asymmetry, right? So there's the downside, which you could lose it, or there's this kind of irrational upside because we don't know what this tech is capable of. And it's still early, very, very early on in kind of what we're witnessing. So Ethereum right now peaking into what appear to be new all-time highs. Glad we timed the show for that one rather perfectly, or well, I guess serendipitously. Ethereum is now clicking in at $2,090. So I guess what I want to always try to do is provide myself kind of a retrospective analysis about, how did we get here? What happened each steps of these along the way? Because we've been charting for the last 3 years, and we just very, very beautifully caught this bull market right from the beginning, way back in March. Let's see, we're gonna have to go, I'm not even sure if this chart's big enough, but way back here in March, boom, there it is, the pandemic started, right? So we're extraordinarily high up. Now, number one of these things that this makes me do is go, great, we've been able to identify undervalued assets in the venture capital sector, and B, we've been able to perfectly find the beginning of the market cycle because it's much more visceral, I think, than most people recognize. They get caught up in the charts. So this area of accumulation that we first saw with our first primary SOS and backup phase for Ethereum was a fucking monster. Was a monster, right? So we know the power of why we study Wyckoff. We also know the power of why we like asymmetry to the upside. And now as we get further and further into the story, it's going to become more and more important that we think about when the market cycle is over. You can do a lot of kind of shorter time frame studies. Like if you go in on the 15-minute and you're charting back here at the top of the previous buying climax, you can actually see some of the distribution properties that were taking place in Ethereum when it fell down before, right? Because we're astronomically high compared to where we were, and that means every day further the risk increases on that holding, and the likelihood that you're going to see a large price regressions increases pretty much day over day over day, because the likelihood of the black swan that we all know eventually happens somehow people forget that just the random always happens. So you should be prepared for that in your thesis, and not just think pie in the sky berries. You need to have protections against that. A few different complex ways to do that. But more importantly, right now, let's just look at it as the beginning and the end of the market cycle, or the alpha and the kind of omega of that cycle. So here you could see actually a small distribution period and a nice upthrust, and a significant amount of supply that came into that market during that upthrust before you saw the breakdown of around a 40% drop. But if you're good at the market, who gives a fuck about this 40% drop? It really is almost meaningless to us when we know that had you got in Fetch, Matic One Seller, or any of our early venture capital plays in that first accumulation area, before the bull market started, you're up 40 to 50 times your money in less than 12 months. And that's extraordinary, because this was the best place to be taking these positions. And this was the best place to start recognizing these accumulation. Here's a selling climax, your kind of accumulation, and then your breakout of your SOS. And we were watching this very diligently. You can go back and watch all of our videos as we kind of went over this stuff. In the early, I guess in, what was this, from pretty much March onwards. My first video is right around the March pandemic, like we're a little bit too cowboy per se. I was like cowboy capitalism, digital cowboy, and that's totally what we see today. It just is a lot better put together than I thought. I was like a little worried we might have to be riding horses. I wasn't sure. It was my first like major cataclysmic moment where I had shit I could lose this time. The first time I was hitchhiking around Central America, I didn't give a crap what happened to the financial system in 2008. Now I'm like, oh no, wait, like I live on that. That's infrastructure for everything I do. Driving, planes, visiting foreign countries. Like, I like doing that. No. Anyways, so that kind of cataclysmic moment was the best time to start investing. We saw clear signals of why you'd want to be the market here, and also here with a reaccumulation after decline, for we took most of our leverage positions from 380 to 404. So now that we're way up here and we're looking at these new all-time highs that are breaking in, the curious thought is that as we go through each of these reaccumulations, you kind of, people get bored. They're like, oh, it's just going straight up and look how convoluted it becomes. It's like, no, the market cycle is a much bigger movement usually, right? It usually becomes highly irrational in the way it shares its growth. And we started off in a very rational place where people were scared and maybe somewhat irrational, right? Buying toilet paper, that's definitely an irrational thing, but people were scared, which is a rational feeling for something that's unknown and potentially life-altering in many different ways, new experiences that you weren't necessarily calculating on your day-to-day. So a pandemic has that capability. There's a bunch of things. It could have been an asteroid in Los Angeles and really make you kind of like recheck how everything works. Anyways, the point of this is we're dealing with this kind of cycle of people dealing and interacting with the random, right? So we have to calculate into our thesis that prices move based off shit that we can't see in the future that is going to happen and will happen, but we don't know what it is, but we'll be able to tell when we're getting closer to it. That's one of these unique functions. This market cycle is going to come to an end one day. Now, we've a bunch of our thoughts still have us potentially having Ethereum upwards of like $6,000 to $8,000 on this next cycle up. And that's kind of the unique side point here too, is we're looking at an area of an accumulation and then usually reaccumulation and then up one last cycle and then finally like a distribution to go to another longer reaccumulation pattern here. So this is kind of like an idealized market cycle. And this moment of distribution at the top is very, very, happens very, very quickly. So I don't think that most of the time it's very difficult to grab the top and be out of the market because you have this extremely volatile swing up and down. It's like moving 40 to 50% in between the box. And you see something that's kind of similar to what we're seeing now. On the plus side, this break above the box for Ethereum is moving on less supply. And we've often used Glassnode to kind of help share some of this idea as well. So we'll just go over this and we'll just kind of focus on Ethereum for the moment, just because it's having new all-time highs. Everyone likes a little bit of a celebration for our, for the portfolio. But I guess more so for the thesis. I mean, the profits are always fun, but I like that we were right. It means we can continue to make those outlandish bets in a bunch of different areas. So Ethereum, from first off, again, to recognize that buying and selling is really the only function of price. The underlying asset itself is almost irrelevant if you want to be serious. Most people don't like hearing that, but it's the truth. But let's look at it. We'll kind of ignore what Ethereum is, and we'll just look at the balance on exchanges. And the reason why this is so important is because this is very clearly a story of supply and demand and how much demand is on that open market. Now, if Glassnode would go ahead and just load for me. Yeah, there we go. Exchange balance percent is actually the one we like. It's just a one clear data, and yeah, this one clear data point shows us all the way up to 2029 for some reason. We're seeing into the future, ladies and gentlemen. Okay, so here the blue line represents the amount of Ethereum on open exchanges, and on January 19th we had a big drop where a massive amount was moved off exchanges, and on a day-over-day basis we've been basically declining over and over again. We've lost about 2.5%. Now currently Ethereum is creating more, right? So there's it's an inflationary process at the moment, but they also might be changing that. So the tokenomics, which is again how price kind of derives the value through this buy and sell side volatility based off how much is on an open exchange, will increase if they do go down that route. So we can expect, and well, not expect, but let's say we can hypothesize that there's a real potential that we go to $6,000 to $10,000 Ethereum still. Now, I think people often get thrown off when I'm like, oh no, like look at this supply test, it's noticeable. I'm still bullish, right? We've been bullish because we had this long-term market cycle down here where we started to build our positions, and now that we're here, all we're trying to do is find out how heavily we want to be in each of our positions. So this looks now that it's completed, it actually looks healthy, right? So here it was just a little worrying because a massive amount of supply come in, it retests into the back buying climax. We need to use our assessment of patterns each step of the way. I don't want to try to predictively move steps each, like try to figure out how it walks to maybe $6,000 to $10,000 because I'm going to get that wrong. But if we have in our sights that it might get there, even if it's a failure 5 years from now, which is unlikely, it's going to continue to move in this bull market today. And that's kind of one of the underlying sentiments that's also hard to grasp, is literally everything goes up right now. Like you've got Link up today. Aave is up at 410 today, kind of breaking above its reaccumulation after decline. Band moving right along its regression channels. I do like regression channels every now and then. Kind of just helps measure market sentiment as well. Like look at this buying climax of the SOS straight to the top of the resistance line of some of the previous areas. So actually let's go in here. So here's Avalanche 2. Again, you can see we formed this, what appears to me at least is a reaccumulation after decline. I think we tried to jump against the creek and we've backed right into it because it was such a heavy like denotion of the creek, basically, that the creek was basically running really low here. So even though we got to break against the back up against the creek is kind of the next important part of these cycles. And we see that in a few of these too. Like it becomes a bit clearer here with Kava. So primarily we have this big amount of obvious interest in Band or in Kava show up, and then the increased spread for limited supply. Now, on a consistent basis, we are getting this nice growth pattern. Now, but here again, we still see these signs of strength come into the market, and that's kind of what we're looking for, are the strengths without distributional power. So a KNC again right back up to some of the top areas of its regression lines. FTT looks like it's starting to move well above. Now I liked FTT for conjecture here. So one of the things we like to do with the private group is kind of go over these ideas and just take a kind of a general interest in in education, I guess, and learning. So here we see a nice horizontal trading range, and we've witnessed this before. So what I want to make is that the conjecture here is how we're actually viewing these patterns, because over time you get to see these footprints more and more. And I think that this is a reaccumulation of schematic 3. It's also one of the most powerful, and it can appear as a rising gradient bottom throughout the channel itself as well. So there's multiple things taking place here in FTT that I really like. So I'll kind of go over that again. I think that's what we're seeing in Bitcoin, and I think that's what we just saw in Ethereum as well, is that you're actually witnessing this kind of longer term rising gradient bottom pattern. So something like this, where you've kind of got your primary support, your buying climax, your shakeout. You might have this jump up. It might spring back down into like $1,900 and then take off. And FTX, I think, is giving that as a really clear picture right now. And I think that's what's happening with both Bitcoin and Ethereum. And this is why it's always confusing for people who show up and are like, yeah, Ethereum's going to rip to $2,600. And when I say that, I mean like within like 100 days is not, it's like not a very long time to wait, guys. But people usually take it more implicitly, like it's going to happen tomorrow, right? So here with FTT, we're our buying climax. We got our first shakeout, and what looks like an SOS and then a backup phase, right? So I think that this SOS and this backup phase can be viewed almost as that this is the spring of phase C. You see that significant amount of supply coming into the market, being absorbed, and then again, you're kind of gonna see this bigger trading range potentially take place where the market's gonna go almost hyperbolic after this, and we see a lot of plays lining up like that. Started adding a bunch more synthetics because of this kind of nice falling wedge through the channel. Like this is why multiple pattern recognition plays can be so smart. Like I love the Wyckoff method mixed with the megaphone and the understanding that these springs occur, especially because the springs seem to occur on this abstraction too, where in phase C, we have the rising gradient bottom. The actual box of spring, like the spring isn't even in the trading range. It's above the trading range right here. So again, I think that's super cool to kind of witness the way these footprints bend in the wild. Because it's all, I think it's all pretty clearly fractals of universal stuff, you know. But anyways, it's a much broader concept we won't dive into. So now that, look at that, Ethereum up at $2,100. That's it. Congratulations. Congratulations, ladies and gentlemen. $2,600 is not that far away. And it took a little bit longer than probably most people thought. What is that, 30 days? Oh my God, we didn't have to wait at all. So again, I didn't reduce any of my Ethereum position. I made that very clear in the shakeout. I just said it made me a little worried because of the supply signatures, and you should be watching those. I'm not going to just be super hopeful about Ethereum. I want to watch the signatures, and if things change, they did, great. I'm still in my positions. I'm stoked. Remember, we were building most of these back at around $200 to $300, and we're just letting that pretty much move its course. Every now and then I accumulate more venture capital stuff that I feel is a much longer playing format, but Ethereum, again, this is great to see. And part of the conjecture now is that if we do see this kind of rising gradient bottom potential, I don't necessarily see the spring have taken place yet. Are we going to run to $2,600 and then spring right here at 2,200 and then move back up outside of the box and then go absolutely ballistic? And I think that kind of puts us on the final course for the kind of the end of the bull market. That probably puts us somewhere between August and the end of 2021, pretty much, you know, the start of 2022 for kind of the finality of the bull market, and maybe a little bit, you know, a little bit in either direction effectively. So everything looks really healthy. It's nice to see. And again, I think that if we use kind of the FTT token as this more clear example of what we're witnessing, I think in both Bitcoin and Ethereum, is this rising gradient potential for a really big move to come out. And across the board, you're seeing accumulation patterns. Synthetics just moved in its point of control. Balancers right back up to the top of its like long-term support line. Same with 1 inch, you're seeing a nice reaccumulation after decline. GRT, very similar. I like how we've seen this kind of falling wedge pattern. We've discussed how this can appear before, and especially in our earlier videos back in March, because that's what Fetch was doing. Fetch was creating this falling wedge into the start of its trading range, where the falling wedge would kind of finalize right in the moment of the spring, effectively, or like this. So this would be phase C. I like sushi. It does not look like very strong to be stuck under this trend line, especially when so long ago we had our initial kind of megaphone pattern, and this was the powerful spot to be in, was getting in sushi obviously in December. We had this nice kind of, again, this widening LPS pattern, which is just obviously the run we like to take. It's a little bit too risky up here, unless it's strictly venture capital. Some of the other ones just have much clearer, like synthetics looks clearly being accumulated right now by big money. And same with Rook. Rook actually had a really nice move too, where I think from an educational standpoint, you can see the kind of opposition of the rising gradient bottom. You can see the falling reaccumulation pattern. And a very interesting spring here too, where these 3 big supply checks kind of came in instead of one final supply check. So I think that this is kind of evidence of maybe even more singularized operators, because these are such illiquid ecosystems. Seeing like a just throwing supply out into the market every 24 to 48 hours, almost by bot timing, just bang, bang, bang. But I believe we're starting the SOS, so this would be phase C through this reaccumulation channel. Yeah, I love it. The market's fantastic right now. Very, very excited. Everything looks bullish still. Again, we haven't changed our sentiments, but a little bit longer. You know, again, I guess we could, let's say, did we get this wrong? Yes, we get stuff, first off, we get stuff wrong all the time. I clearly acknowledge that. But more importantly, this widening kind of megaphone pattern here, even though we're seeing it in flow, it's much too short of a time frame for me to be extremely excited about it. So when I'm drawing it in here, I'm actually drawing it more for like support and resistance levels than I am the expectation of a blowout. In terms of like what we saw with Ethereum, where way back here, we are seeing this widening megaphone pattern take place before we started to basically exponentially blow up. And we can look at that back over here. Ethereum to USD, I think is where we had it drawn. Yeah, so here's your widening megaphone for Ethereum based right out of the spring. And that's like the sexiest, right? So first off, this is multi-months, right? So you always want to take into account the time frame of each of these. So if I'm looking at flow and it's on a 6-hour chart and you're seeing this widening megaphone pattern, that means it can be invalidated extremely easily. Whereas Ethereum, we're looking on the 6-hour chart, but we're seeing from March all the way to basically March, right? We're seeing an entire year of this megaphone pattern before shit goes ballistic. And this is where you want to be making entries, right? This is the entire area that you want to be accumulating in as a good investor, basically, because it's the start of the bull market. And usually they're quite explosive because it's a much longer conversation about venture capital again, but nonetheless, these widening megaphone patterns, if we're looking on flow and we only see February, March, and April, well, this is much less significant than what we're witnessing when we're going March, April, May, June, July, September, October, November, December, January, February, like almost a year of this widening megaphone pattern versus just a quarter of a year instead. So keep in mind always to be aware of the relativity of these, because even though I've drawn a widening megaphone pattern, it wasn't the widening megaphone pattern that we were relying on Ethereum. This is why we started to go heavy in Ethereum too. This is exactly the way we had drawn it in April, May, June, July, August. Like, we haven't changed a fucking thing. Like, it's brilliant. I love it. And so this is the kind of the back testing of the thesis that I like to be able to do. We've got enough time on deck to have really done that now. So just to kind of finalize back through theta, I think theta is probably going to form another reaccumulation here, just based off the fact that this peak was not overabundant in supply. So keep an eye on it here, although I would be very weary of potentially a reaccumulation after decline, where what you see is a breakdown to do this as well. So keep a close eye on that. Might provide another place to play, but more importantly, I think the larger time frame here with DOT as well. So again, recognize that this widening megaphone pattern is really only from December up until March, right? So it's much less significant than this year-long megaphone pattern we are charting with Ethereum. But look how, number one, the megaphone pattern kind of played into where the spring happened, and this has happened with a bunch of it as well, right? So when we're identifying footprints out in the wild, well, look, when flow kind of hit that point of the upward resistance, well, it fell into a spring here as well, and we saw that with a bunch of them. Synthetics as well fell below. Boom, there was the spring take place below the widening megaphone pattern itself. It didn't happen in Balancer, didn't happen in FTT. So anyways, there's a few, I guess not obviously every single one, but there are a few that had this very similar characteristic where it fell through to the spring, and is and DOT actually at this moment is trying to again reaccumulate around that support channel from back in 2021. So DOT looks really well positioned. Again, guys, I want to encourage you all to really be good at where you're at, right? So I've been doing this for years. So there's a lot of things I don't do that you should be doing. Like number one, you should probably be labeling everything, right? So if you're new and you want to get good at it, the best way to do is go through the tedious process of labeling. Like I don't even want to waste my time, and I just go stuff. I was like primary support, motherfucker. I'm a graffiti artist here. And it works out great for me. Is Wu Wei, but there's a bunch of ways you can play around with kind of informing yourself about what you're seeing, and I highly suggest doing that, especially in your early days. You know, if you're new to understanding this stuff, you just want to take as much time as you can and devote to really kind of leaning that in. And kind of for a shout out, I guess here, what we'll do is we'll highlight the private bear group. Last time you force quit. Okay, we'll just reopen. So we have a private community and private newsletter, and one of the things we do is kind of have like a graduation system. It's kind of fun. So you join and you become a koala bear, no matter how long of a membership you join for, you get the koala bear tag. And then what it allows you to do is go through this kind of learning process. And in the peer review area, what I'll do is, again, because I want you guys to be doing your homework, I'll make a drop, like, hey, look, here's what I'm seeing in synthetics. Go ahead and finish it off. And actually, we were going over DOT, and that's where we're at, is this idea of DOT. So I wanted to highlight some of our private members' work. So here's a DOT reaccumulation by Exhale. I want to give them a shout out. All these guys deserve to graduate. Actually, I think they've done a great job here. You see a nice point of control reference. Oh, nice. There's the spring. Here's the indicated volume. We see decreasing volatility, also decreasing supply, moving through the middle of phase B. That looks good. We're seeing the break above the creek. I would like to see a backup against the creek, usually some type of back test of either the point of control or the creek itself. Looks perfect. Awesome. Great work, Exhale. And then Bad Bird came in here with his. Another great idea. Yeah, over the creek. Secondary test, your springs. Yeah, we can definitely see that. This was done in perpetual futures on FTX. Clearly, it looks like a clear spring again, which is usually equal supply that came in during the primary shakeout. We see the start of what could be an SOS. Now, I wouldn't go so far to say it's an SOS yet. I would call this a test, and this just an LPS if it came back down. And again, you'd want to test the back up of the creek usually. So your creek has fallen down really hard here on Polkadot, so it could actually fall to 32 relatively easily if that were the case. So a backup against the creek is quite often nice to look for. So good eye on that one. Here's Nojika's version. Awesome, looks good. Your phase B, your spring. Yeah, I would tidy up this phase C and focus it just on the spring. You've got your supply here found on the 12-hour. Looks good. On using Binance though, interesting. Nice supply signature on Binance as well. Nice move into phase D, not into phase C, and good. No SOS yet. So the jump across the creek and the back up against the creek, I think, are important. Great work. And Bar, I think we'll finalize with Bar. So Bar, nice initial change of character for the start of the trading range, your primary shakeout. You missed circling the supply range here and the supply of the spring. Although I do like your indication of the effort versus result in your two ranges here. I definitely think the importance of the spring and the supply characteristics being similar to the primary shakeout is an important factor I've seen repeated basically over and over and over again. Not always, but often, and enough to take note and then want to reshare that note with you guys. So great work to all the koalas. I think you guys all deserve a graduation for that. I wanted to point out all your work, but also didn't want to have to write about it. So I think I'm just going to share one of yours work. Oh, let's see here. Carl was looking at Theta. I'd say it's a little maybe too early in Theta yet to recognize, again, because your widening megaphone pattern here is only drawn on the shorter, 240, it's like a 4-hour time frame. So I would be a little weary about a potential reaccumulation after decline, especially because this widening megaphone pattern is only on a month time frame. It can be invalidated in a very short period of time. Anyways, super exciting. I think I'll give all of you guys a graduation. I hope you're watching this video. If not, I will. Well, I'm sure you will be, but you're also getting a shout out in the bear den. You'll get your koala tags. So I think these are all great. And again, that's the kind of the fun part is if you're new, that's the work you should be doing. Whereas with me, I have a bunch of other stuff I'm trying to do. So just kind of a fun highlight moment. Chantel. I don't know if any of y'all know who Chantel is. I'm just kind of learning. So Chantel is a female like artist. I'm just being so simple, Tio. I know very little. Like I like to just ask questions. So I kind of like to learn as I'm going, basically, in R&B and hip hop. She's doing some NFTs, and I think it's a kind of a fun conversation to continue. Let's see here. Owens on Twitter. Nice. So follow us on Twitter. Chantel Lane. Yeah, this is happening. We're the first Black women in music to mint and launch NFTs in history. So link in bio. So we're stoked to be able to have a conversation with Chantel here. And again, my main interest here is that there's a growth of this ecosystem in digital technology for content creators as well. The Arcane Bear, I've always loved that this kind of gives us the ability to communicate with our community. And that's so valuable, you know, these distribution lines, the products that we can create, the unique ways to experiment with technology while doing that. So I think it's gonna be a lot of fun. There was what else I want to go over? There's something else. Oh yeah, the flute. You guys always like when I play the flute. Alex Kushner says, "Dang, I joined late." Yeah, we could maybe run it for a little bit here. Matic, time to sell Ethereum. Guys, I play the long bull market and even often try to now focus on longer, larger cycles, period, knowing that the bear market will come and knowing that the bull markets will also come. Okay, cool. Well, thank you guys for joining us today. Let's see if there's any good questions that aren't just about how to time to sell. It's so silly, so silly. This fruit badger guy is, it's funny that people always think that they know what they're talking about, yet aren't willing to actually, they don't have a reputation for doing it at all, right? So fruit badger, some no-name guy who's like, yeah, I know exactly what I'm talking about. Don't listen to this guy. Like, dude, where the fuck were you in the beginning of this bull market? I ain't never seen your name around. You definitely sound like the new guy who no one should be listening to. That's my opinion. We've been here and doing very, very well with our thesis. So you can shut the fuck up for all I care. So what I do for people like this is if they talk smack and they're like, don't listen to this guy, I just go hide user on this channel and they're no longer allowed to comment. Oh, and that's it. Because that's the fun of having a private community. We don't need your flack, you moron. We're fine. You don't like our content, you just leave. There you go. You can't comment or anymore either. Does that make you feel better? We don't want you here. Fun. Let's see. Check out Hex. I'm not a big fan of Hex, guys. You know, maybe it's a thing, but there's just so many other things that I really don't feel like focusing on so many of everything. Like I can't focus on everything. It just doesn't make any sense to even try to do that. Clarinet, yeah, maybe. Here we go. Okay. So again, guys, there's there's always so many tokens to go over. I don't want to go over tokens for you, right? My goal is so that you know what you're doing so you can do more, so that everyone who's amazing can produce their own content. And when they're we're sharing, they're like, oh, amazing. Look, everyone's recognizing DOT. Perfect. That's a valuable thing. We are comp man, ladies and gentlemen. That's a serious deal. Okay. Thesis works. Everything works great. We're super happy about that. Next 10 years is going to be absolutely amazing. This year has been absolutely amazing. So I'm excited. Thank you guys all for joining us today. For those of you that don't like the content, go ahead, give us the thumbs down. That's fine with us. We're happy to have you dislike our content as well. If you like the content, do the opposite thing and then give us the thumbs up. If you're new to the channel, please subscribe. We are pretty niche. I like to ramble and rant and kind of create conjecture and sometimes even pontificate when I'm feeling extra spicy and just really put myself out on a limb just to find out where I end up. So thank you for joining along that journey. This is, my exploration into adventure capital, and apparently a more like closer personal philosophical advent of like doing less but achieving more, because apparently that's like a real deal thing that, you know, you hear about some of these philosophies, right? Like a borrowed wisdom type of idea. Like you could tell me about that, but unless I know it through experience, it's kind of difficult, right? You don't generally learn that the fire is hot. Like I can tell you the fire is hot, but you're going to find out because you're going to try at some level or another, maybe by accident, and then you'll know the fire is hot. So I think that's an important part of life, is that even though we can kind of share some of these sentiments, you can learn how to do all of the technical stuff. Part of it is really a visceral experience through time that you get that makes you good at it. And then you start to rely on only your information. So thank you guys all for supporting us. I have a lovely time going through and kind of sharing my my learning process, right? I'm not always right. I don't know what's going on, but this is us learning, and this is the level of rate of, I don't want to say success. It sounds egotistical, but the kind of, there's a significant or statistically significant difference between this investment strategy and others. And I'm very happy to kind of have that long-term viewpoint. Like venture capital is such a wonderful opportunity that we have. The whole ICO space in 2017 was so fucking cool. Like the idea that you can launch companies right now, launch a company potentially on an open source, decentralized financial network and have almost anyone in the world invest is fucking cool shit, ladies and gentlemen. Super hip. I'm sure I try to express that to you enough, but that's why I'm here looking at charts and shit, is try to help you guys understand how excited I am about the whole technical space. It's just the easiest way for me to kind of understand its value and in my day-to-day functions. Anyways, see you guys on the next episode. I wonder if I could play some flute. Could play some flute for you guys. No, we'll do it next time. Show up next time where I'll play some music for you guys. We'll see you on the next episode. The Tea with the Arcane Bear. Oh yeah, and follow us on some of the social or media channels all below. Whatever you feel like doing. It's supporting us makes a difference. At least to me. It makes a difference to me, guys. No, I love you, and we'll see you all on the next episode. Bam.